guys, Henry here from IFE. So today I want to go over the top 5 funds for my picks in 2021. So there's a bit of a disclaimer, we are already in April, so it's a bit delayed. Apologies about that, but we'll just go over what I think are my top funds for the outlook for the rest of the year and where I see it. Just a bit of a disclaimer before we go on, it's not financial advice, and if you are holding funds, it is better to hold them for the long term, so short-term performance isn't necessarily too much of an indication of the funds, especially as what we've seen last year with the volatility in the markets. It is better, most fund managers do look over, active fund managers look over a 5-year time frame. So first we've got Fundsmith. So Fundsmith is one that I've talked about quite a lot in a number of my articles, in a number of my videos as well. Basically, what does it do? It's owned by Terry Smith. He did his annual statement February this year. Obviously it was by video. And he just picks good quality companies, and it kind of reminiscence of the Warren Buffett style of investing. Good quality companies, good profit margins, looks for more growth than value, and just holds them and does nothing. So it's a very simplistic approach that many fund managers don't seem to adopt, but has seemed to do pretty reasonable over the long term. So here's the views over the long term. As you can see, that's apologies if not. So it's done 17% last year and 25% in the other years, and it's got a beta. So beta is the volatility over the benchmark. So anything over 1 is going to be more volatile. Anything less is going to be less volatile. It, over a 3-year period, has a beta that is less volatile than the market. It also has alpha that's higher than the market, so it means it's producing better returns, and this is also reflected in its Sharpe and information ratio as well. So the companies that it's holding are PayPal, Microsoft, Estee Lauder, Index, Facebook, Philip Morris, L'Oreal, in its top holdings. Why has it picked them? It's just good quality companies, good profit margins, and they don't pay too much for them. Also, Terry is quite evident of not overpaying. So some of the questions, I'll put a link to my other videos that I've done about Fundsmith, and a bit more of my blogs about why it hasn't gone into Tesla, why isn't it being more tech and jumped on the bandwagon in that. Also, I'll put a link to that, but basically it just holds companies. The other one is number 2. I've got Morgan Stanley Opportunity. So it's another active one. 2 of the active funds in this portfolio of my top 5. This is a bit different to Fundsmith. Obviously, Morgan Stanley Global Brands, another very good fund. Be happy to use, one of the few active funds that I actually like. It works in cohesion with this. So Morgan Stanley, they've been very clever of how they've adopted both the global brands and global opportunity. Global brand is ones that you use every day, kind of Reckitt Benckiser, Unilever has more of that in it. The opportunity is more looking at tech stocks and also growth orientated. So if we take a rundown of the holdings, it has MasterCard, Amazon, Uber, Tal Education, ServiceNow, HDFC Bank, Visa, Disney, and DSV. So what are the takeaways from that? It's got a lot of tech, as we've said, but also it's looking more the shift to the east. So things like Tal Education, HDFC Bank, it sees growth in these sectors.